Hey, good morning, traders. Good morning. Um, I want to come to you guys real quick before I get started on my day. I did my analysis last night on the Canadian dollars and the Swiss franc. I do apologize because it's been a while. It took me a while to do it, but I had to just get it done because it was the holidays this week. Thanksgiving. Then you had Black Friday right after that. So I was spending a lot of family time, and I hope you guys did the same thing with you guys' family. You enjoyed your family, um, got to eat good food, and but now this is a brand new week. It is Monday. It's Monday, November 26th, and right now it's time to get back to work with the trades and finding quality setups and the trades and the markets. Okay, so this is the EuroCAD. It's just a recap of the EuroCAD. Um, right here, you can see the EuroCAD. We had a uptrend. This is the monthly time frame. We had a uptrend right here, and then the market broke this uptrend line, and now we have a downtrend line, and the market is honoring this downtrend line, and we are in the sell zone. So since we've broken this uptrend line, we've entered into the sell zone. Market is honoring the downtrend line in the sell zone, and the market makes a high, makes a low, lower high, lower low, lower high, lower low. Now the market has made that lower high going to make that lower low. So this is a grand selling opportunity. So that's the monthly. We go down to the daily, and we went down to the daily time frame. And on the daily time frame, you can see this crown formation, where the one market takes out the trend line, two market takes out the A on this Fibonacci swing. Step three, we anticipated the left tip of the crown. Step three, we identified the left tip. Step four, we anticipated the right tip. And step five, we will sell the right tip down to the 1618 extension. So that is our target we're going after. That is 800 pips away from current market price. Right now, you guys should have a counter trend line break. That's your sell trade. That's one sell. You have two sell trades. Market retraces back up past support, coming future resistance, breaks the counter trend line. You have three sell trades, four sell trades. Right now, you should have five sell trades, one going against you. But this backside of this counter trend line has been tested and it held. So you should have five sell trades at this point, and we go down to the 4 hour chart and we look at the 4 hour chart, and we can see on the 4 hour chart where we had past support becoming future resistance that we sold, but the market actually found a point of support and resistance, found a consolidation range. So in this consolidation range, we decided that we're going to go ahead and just trade from the price action from the top of the consolidation to the support of the consolidation. So in did have a uptrend going, and now we have broken one of the trend lines. We still have two uptrend lines that the market may gravitate to. And so since we have entered into the sell zone, we tested the backside of this trend line. We are expecting the market to go down to the south. And we go, and to add more value to that, we go to the 1 hour. And as you can see on the 1 hour, we do have a crown formation here. We have a crown formation where the market took out the A of this Fibonacci swing. One, it took out the trend line, took out the A. Then we anticipated the left tip. We identified the left tip. Then we anticipated the right tip. And now we're waiting on step five, where we're going to start selling the market at the break of this counter trend line, bearish. Once the market closes bearish below this counter trend line, we're going to start selling this market. That is a good entry point, and that this 1618 extension off of the 2-3 bounce, that is convergence with the Fibonacci, with the consolidation range. And actually, if we look left, then we have what looks like support, resistance, and support, past resistance at that price point. So the market likes to revisit past support and past resistance levels. So that is a grand opportunity to start selling the market, and grand opportunity to after go after 177 pips. Going after 177 pips, and you're only risking about 35 or 40 pips. So that is a good risk to reward ratio. And that's how we looked at the markets. Okay, now we're going to jump into the Canadian dollar and the Swiss franc. I have already did the analysis on that, but we're going to walk through it real quickly here. Let's walk through it real quickly here. Hold on. All right. All right, this is the Canadian dollar and the Swiss franc. We did have a downtrend going. We had a big downtrend going back from June of 2010. This market has been on a downtrend, and right now it's looking like it wants to start going on a uptrend, as we've broken the downtrend line, and we have a uptrend line that has been honored. We have entered into the buy zone, but the market has found a level of resistance, but is still finding a level of support in a uptrend fashion, which would be a ascending pennant. So in this ascending pennant, we're looking to just trade from level to level. So since the market has already honored this uptrend line, and then actually it honored this uptrend line again with this candlestick going up, so we are going to trade from this point up to that point, and then which is that is 237 pips. That's roughly 237 pips away. So we go down to the daily time frame, and we try to find a convergence that with this resistance level. And on we looked at the most recent move, and we did have a downtrend. We broke the market up into a sell zone and a buy zone. This red downtrend line was broken, and the market entered into the buy zone. So now we're into the buy zone. We have this bull crown here, with the market taking out this that downtrend line. One, market takes out the trend line. Two, market takes out the A. Step 3, identify left tip. Step 4, anticipate the right tip. And step 5, we start buying that right tip of the crown, which could be the right tip of this crown right here, because that is your Gartley pattern. You have a Fibonacci A, B, and a 786 retracement, which your C. And then we have the 127D extension, and the market is already retracing back to the north. So that's a grand opportunity to start buying the market, with this Gartley being a correction, and the stochastic is oversold, and we've entered into the buy zone. So that could be our right tip, and there's a great chance that we can start buying the market up to the resistance level. So we go down to the 4-hour chart, and on the 4-hour chart, when we look at our most recent movement here, we did have two downtrend lines. We had an outer trend line, then we have an inner trend line. We have one Fibonacci swing that has fulfilled. We have this second down A to B Fibonacci swing. The market did come down. Looked like it found support at this 127 resistance support level, and then now the market is going up. So, and the power of trend line trading Once a trend line has been broken, the market will gravitate towards the next trend line. So since the market is gravitating toward this trend line, had broken this trend line, entered the buy zone. We're honoring this uptrend line, and as you can see right now in the live market, um, the market was below the trend line, but now it's starting to come back up. So this is a grand buying opportunity to go from this trend line to the next trend line, given all the other information that we have received on the monthly and the daily time frames. So even though the stochastic is in the overbought and could be going down, the daily time frame has more weight than the 4 hour, so we're gonna go with the daily. But to get a smaller risk to reward, to get a smaller pip risk, we want to take it down to the 1 hour time frame. And right here on the 1 hour time frame, you can see that same movement. And right now, looking like we have our two uptrend lines. We have an outer trend line. We have an inner trend line. We have a Fibonacci swing, A B swing. We have found our C swing. It's not quite the 786, so we're still going to exit out here at the 1618. So with that being said, the market is breaking this counter trend line, but we need a bearish candlestick to close above this counter trend line, and from there you will place your stops. What is this? You will place your stops 10 pips below. So that's 75, 75355. We will go 75255. All right, that'll be your stop. And this right here is going to be your take profit. So once the market closes with a bearish candlestick, we will buy the market, and we're going to exit here, and our stops is going to be there. That's actually a nice scalp trade, looks like. But what you want to do once we hit our take profit, we will just trade Fibonacci swings all the way up until we hit the resistance level, which that resistance level on the monthly is 237 pips away, and you can take those bits and pieces off for trading counter trend line breaks on these Fibonacci ABC swings. And that is the Canadian Swiss franc. I hope this gives you guys some value. Again, I'm sorry that I was so late with putting this video out there, but like I said, I was dealing with family, and we had the Thanksgiving, and dealing with family and things like that. And well, if this is giving you guys any value, please like this video, comment on the video, leave your questions and comment. I do load this up on my webpage, and I will be loading this up to YouTube, and this will be loaded up to my Facebook fan page. And I will be sharing it with the groups and the trading groups, and hopefully this helps you guys with some of your trading. Please be sure to check out the website, winmoreforextrades.com. Check out our services page, and you can watch all the videos there, because I have more videos on my website that I may have got lost in the shuffle with putting up on other platforms. So if you guys want to go there, you can go there and get more value. But again, I thank you guys for watching, and I'll see you guys in the next video.